It's been touted as the fourth pillar of the $7 trillion real estate sector. Health makes up about 10% of GDP, and it's fueling a spending spree on property, like private hospitals and medical centres. Super funds and property trusts are all buying in for healthier returns. But there are warnings that any future changes to the taxpayer-funded private health rebate could be a risk for investors. Rachel Pupazzoni has the story.
The Hills Clinic in Sydney's northwest admits 1,200 inpatients a year for mental health treatment.
We try and make sure each bedroom has a nice aspect to look out onto, and if they can actually access a garden like this, it's even better.
Demand for the privately run service is growing, so it's building more rooms.
Given the limited number of inpatient hospital facilities that provide that sort of service, it's something, like I say, we're sadly full, and therefore we've got the ability to expand.
That expansion project is a reflection of the broader health space in Australia, which is struggling to meet the demands of a growing and ageing population. The growth of the health sector, which makes up about 10% of Australia's GDP, has caught the eye of keen investors.
Across the economy at the moment, it's pretty hard to think of too many other sectors that are growing at 5 to 6%.
Barwon Investment Partners has two funds with a combined value of $900 million aimed solely at investing in medical properties.
We'll own the land, we'll build or refurbish the existing building, but what we will do is partner with a specialist in the area.
It's a partnership model that's ensured expansion of the private health system.
I think if we were doing it ourselves off our own balance sheet without any partnership, it would be a challenge.
Last year, Australian hospitals admitted more than 11 million patients. Almost half of them were in private facilities. Of the 1,350 hospitals in Australia, 657 are privately run, up from 5 years ago, while the number of public hospitals has shrunk. The demand on Australia's health sector has never been so acute. But with the security of long leases and reliable tenants, investment in medical centres like the Hills Clinic is set to become even more popular with fund managers.
We can only see this sector growing and investors gravitating to this sector more.
Real estate firm CBRE found investing in private hospitals delivered higher returns than any other real estate asset class in a 10-year period. Last year, it sold about $74 million worth of medical real estate in Victoria alone.
Typically, medical centres were trading in the sub $10 million mark, and the last 12 to 18 months we've seen a spike in medical centres trading for 20 plus million.
Medical real estate is also showing up in less traditional spaces, with shopping centres now taking on more smaller health practitioners like physiotherapists, GPs and dentists. Dubbed the fourth pillar of real estate, the sector is attracting funds from traditional office investors like Dexus, which is building the North Shore Health Hub in Sydney, and super fund Hester, which last week announced a $200 million dedicated healthcare property trust.
So I think that the opportunities will increase in this space, and I expect that when it's an attractive market and an attractive diversification play, so I do expect that will attract new investors.
The asset class is in a growth phase, but it doesn't come without risk. Despite incentives like the Medicare surcharge and lifetime health cover rule, less than half of Australians have private health insurance, and there's an exodus of people under 40.
Regulatory change is probably the key thing we need to watch out for. Will the government change its rebates or the way it looks at the healthcare sector?
While investors are keeping an eye on any potential regulatory changes, healthcare providers like the Hills Clinic are getting on with increasing their services.
We're adding an extra 26 beds to the site, and once we've done that, we'll expand the youth and adolescent ward from 13 to 26 beds as well.
Healthy growth in a challenging environment.